I'm going to stand right over here if you don't mind. And, it's an honor for us to be here today, and we really appreciate the invitation. Several of our guys out of Savannah office, in fact, Carl Bonstead is one of the members here. He speaks so highly of the organization, and we just so thankful to be here. We've given this presentation, I think today is the 6th time. We tried to, when we prepared it, we really kind of, we got it so it kind of fit all across things. We've given it to a couple banks, we've given it to a couple Rotary clubs, and then we've also given it to a entrepreneurial class at Georgia Southern. So some of you may seem, the accountants may seem think it's a little bit basic, but I think it will fit everything we're trying to do here. So thank you first of all for allowing us to be here. Please go to our website, www.dhhccpa.com, to kind of look at us and see what we do. I've asked Laura, and I introduced her just to kind of watch me on the time, so I have a tendency to talk fast, and if I talk fast, I don't mean to, but I'll try to slow down a little bit. This is our forensic accounting team. Myself, Danny Key, right here, middle table, Laura Daniels. The top 3 of us in the Statesboro office, Austin York, the CPA, he's in our Savannah office. Somebody asked me a few minutes ago, how long have y'all been doing this? Well, my first job in forensics, catching somebody stealing, was probably 25 years ago. And then over a period of time, we've always done some forensics, just like some accountants do forensics. But then really with the economy change and the different things in the last few years, you know, we found out that people have always stolen. And they always will steal. It's just a human nature, and that's bad to say that, but that's just human nature. But what is happening is people have stolen and always will steal, but employers or companies are paying more attention to it. We're more concerned about the bottom line now than ever, because it's such a horrendous effect to the bottom line. And our companies, as all of y'all well know, our companies are not making what they were, 5, 6, 7 years ago. So we haven't paid more attention to it. Every organization, and I hate to say this, but even including our accounting firm, Richard's firm, whoever, somebody stole something or somebody did something incorrectly yesterday. I took that pen home with me last night. I stole it from our firm last night yesterday when I walked away with it. Okay, I brought it back. Hope I'm going to take it back when I get there today. So it's at every level. Whether it be in somebody spending too much time on the internet. I don't know how many of you in here, but if you sound like all of you got businesses, we need to have internet blocks on our computers. We have it in our office where people can access internet sites. We have found out in a lot of cases when you go into a business and they say, John has not been able to do his work, or John's so far behind, or Susan's so far behind. One of the first things we ask them is, have you looked at their internet access? Are you paying attention to what sites on the computer they're looking at? And a lot of times, that's what's happening. People are not able to do their job because they're spending time on eBay or spending time on other things. So the typical fraud that we find, and I think you'll all find, is not it's like someone mentioned earlier this morning, is not the $100,000 person goes in and steals $100,000 at a time, or $50,000 at a time. The typical fraud is it lasts for a period of about 18 months to 2 years, and it starts out a few $100 or $500 or $1,000, and maybe $500 this week and $300 next week and $700 the next week, but it happens over a period of time. I'm sure most of this crowd has heard of Johnny Cash, I'm sure. Correct? Okay. We all, and hopefully most of us are fans of Johnny Cash. Several months ago, we were trying to put this presentation together. I was sitting in the office one night, and Danny helped me write it, and some other people helped me write it, and I was trying to pull it together. And I was trying to think, I said, I got to have some way to just kick this thing off and help people understand what we're trying to do here. So we're going to play a little bit of this song that Johnny Cash did called One Piece at a Time. And some of you may remember, if you hadn't listened to it very close, and you'll kind of see a little bit that this is a little bit about the forensic side of things. Obviously, we didn't play the whole song, but I think you pretty much get the gist of what we're trying to say here. It really is fraud. the fraud actually happens over a long period of time. A lot of our facts that I will share with you today comes from the Association of Certified Fraud Examiners, and they're saying that 85% of the fraudsters have never been convicted of a prior crime. Now, I think what they mean by that is that so many times in the past, when somebody caught somebody stealing, they didn't do anything with them. They tried to get them to pay the money back, and they probably turned them loose. They're embarrassed about it. They couldn't believe that somebody would steal from them. That type of thing, and I think that's probably where this number comes from. Most common red flags, we look at it, and if you think about these things, it's really pretty easy to kind of gotta hit them a little bit. Okay. Most common red flags that we have is that living beyond the means. You know, we always look at people and say, you know, how do they afford that? How does she have those? How can she afford those earrings? How do they have those houses? I'm a horse guy. Laura Daniels is with us as a horse person, and we read about a lady a few weeks ago that worked for some government somewhere up north, and it stole like $40-something million, something like that over a period of time. And she had all these expensive horses and motorhomes and cars and all that. You would have thought somewhere or another they were picked up on it. Somebody should have seen that. Expensive trips, financial difficulty, divorce. You know, the divide assets. We've always heard it's cheaper for two to live together than it is one. Divorce has caused a lot of financial problems. A death in a family, death of a major wage earner. Take that out of the picture. Death of a major wage earner and no life insurance. Medical bills, and we're seeing more and more of those type of things now. Medical bills are just, I know when we're doing tax return, medical bills are just getting horrendous now. Control issues. 23% of the times is control issues. The person wants to work all the time. You can't get them to leave the office. You know, oh, they're just working so hard. I can't believe how hard they're working. Well, they're covering up something if they're working that hard. You can't get them to take vacation. You can't get them to take any time off. That type of thing. But you know, on the other side, they're always behind. You know, that same person that's working all the time is always behind. Okay, so they're working, but they're not working smart enough. Well, they probably are working smart, but they probably end up stealing it. Now, does that mean that everybody isn't? And please forgive me. No, they're not. You know, but those are the traits of those type of people. And most of the time, as we all know, the person that steals is the most trusted person in the organization because we put them in the position to steal. We give them control of assets. We give them controls of the checkbook. We give them controls of writing the check, signing the check. You know, I don't see this anymore, but, you know, we used to see these in businesses, these old signature stamps, right? I don't know if we see those anymore. I just couldn't believe how, well, I shouldn't say that, how stupid that would be to leave a signature stamp around where someone can get stamped a check that's being signed. Found this last night that said that most of the thefts, or 18% of them, are done by upper management. Kind of a little scary. And 67% of the people acted alone. It's not 2 or 3 people together that's acted alone. Okay. I think I copied this last night. I got it out of order. Derek's in order. I forgot to introduce Derek Clifton is our IT guy, and I really appreciate him putting this together for me. He's done a super job with all this. Again, look at the numbers. Think about your business and multiply 5% of your gross revenue, and that's what the Association of Certified Fraud Examiners say is being stolen on that average now. On an average. I'm sure in here that's not nowhere the case. But 5%. So if you've got a $5 million business and it's 5%, that's pretty easy calculation. That's $250,000 a year. And that's not necessarily money going out the door. Again, that could be people not working officially, people not, on the internet, people stealing time from it. That's a big deal. Those of us that's in the business of billing time, that's a big deal. We had issued our office about 2 years ago. We ended up having to let a girl go, young girl. Good morning, guys. She was over in the office next to Danny, close to Danny, and we knew she was pretty smart, but we couldn't figure out why she couldn't get her work done. And why it was taking her so long. And so we've got a program, and we tell our people, we've got a program that we monitor emails and we monitor internet usage. Okay, and for some reason or another, whenever our IT guys went in tax season and updated all of our tax service, whatever it is, they had to cut off this, is it Bellar? Is that it? Yeah. The software? They had to cut off the software that we used to block internet access, and then you got to turn it back on. And so she was on eBay all the time. You know, eBay all the time, buying stuff, planning stuff, that type of thing. And so when we found it, you know, that's just automatic dismissal in our firm. And I think that you've got to take a pretty hard line at that. Average fraud, as I said, last 18 months to 24 months, average loss is about $160,000. You know, we're still dealing with small businesses, and most of the small businesses are the most common victims, because in a small business we still have one or two people doing all the work. You know, I talked to somebody here earlier, and he said, you know, I'm looking for a bookkeeper. Do you know of anybody? Well, you know, more than likely that bookkeeper is going to get the money. They're going to make out the deposit slip. They're going to take it to the bank. They're going to reconcile the bank statement. They're going to sign the check, all that, and you just setting everything up. And that's typically in small business. So small businesses, and we all know us accountants, we have to look at, when we do audits, we have to issue these letters and management letters, and we have to make statements if there's not certain segregation of duties. And just about every audit that we touch lacks segregation of duties because they just can't afford enough people to do all the work, do the work and then and segregate the duties like it should be. Okay. Well, we've all seen this. This is the fraud triangle. Opportunity, rationalization, and pressure. If you got opportunity and rationalization, but you don't have the financial pressure to do it, you're not going to do it. Okay? If you've got opportunity and the pressure, you got the opportunity to do it, like like I'm signing all the checks, I built it, and you got some financial pressure, but I just can't rationalize in my mind to do it. I just can't bear to do it. I'm not going to do it. Okay? Okay, so you got to have the three of them to do it. Now let's flip to the next slide. The next slide adds another part to it, and that is, I just scared me. There we go. That's not you guys. It adds capability. Capability. Now instead of a fraud triangle, it becomes a fraud diamond. Okay? It adds capability to it. So even if you've got the others, but you're not capable of doing it, then you don't do it. So that's the latest part of that. Okay.
But everybody's got your